what a rapid currency dilution environment does is it puts every single person in that country on a treadmill to run as fast as they can to keep up with it, not just in terms of where to put their savings, but also how to continually increase their wages so that they're not just being completely left behind in global purchasing power terms. Of course, the same thing is actually true in developed countries, it's just more subtle. So in the United States, money supply grows at about 7% a year on average. And let's say money supply per capita, right? So if money supply is growing at 7% on average, money supply per capita is probably growing at 6% on average. If you're not keeping up with that, you're becoming a smaller share of the network.
The fundamentals of the US dollar are terrible. And well, everyone who's got a portfolio, and there's about $100 trillion under management by portfolio managers around the world. And that game is basically asset allocation. You're allocating your portfolio to avoid risk and get the biggest return you can. And the dollar is being downsized. People are moving out of the dollar. They're moving into Bitcoin. Bitcoin is now considered to be a safe haven. It's considered to be a risk off investment, which is incredible.
There are 160 different fiat currencies, roughly. And they're all like these little silos. They all have a local monopoly on their jurisdiction. They have very little salability outside of their jurisdiction, except for the dollar and a few other top currencies. And that is largely enforced due to the legacy system. So you can only really get money in size in or out two ways of a country. One is physical ports of entry, so you can bring cash or gold through an airport. Obviously, you're usually tightly limited there, usually under $10,000 worth, sometimes less. And the other way is wire transfers in or out, but those are completely controlled by, government central bank regulations. And they get to decide, if I send dollars to someone in another country, does that person receive them in dollars, or do they get converted to local currency at the official exchange rate, whatever it might be? And even fintech companies are just really mostly just overlays on top of the correspondent banking wire system. They just basically have accounts in multiple things and can make those go quicker, but they're still usually relying on the underlying banking. And with things like Bitcoin and stablecoin, and there's even gold-backed stablecoins. But what all these technologies do is kind of crack open these 160 different silos and allow monies to compete globally once again. So someone in Nigeria can now, you can bring infinite value density of Bitcoin or stable coins through an airport by memorizing 12 words, for example. Or if I pay a graphic designer in Nigeria, she can hold up a QR code on a call just like this, and I can pay her, and she gets it could be Bitcoin, it could be stable coins, whatever she asks her for in her invoice, she can receive. And it just goes around her local banking system. As long as, from my perspective, as long as like I'm not breaking any American laws, like I can't really necessarily hire like an Iranian graphic designer, but as long as I'm not sending money to a sanctioned country, this is now a method to get value to someone in the money she wants rather than being stuck with the local system. And as long as she has access to email, DMs, video, and basically internet connection, she can now bypass those prior two methods. And so the world's becoming more interconnected in terms of money. And I think that has big implications going forward. I started to realize money was broken in some sense back in around 2017 or so, um, because we started to get a widening fiscal deficit in the US, even though we were not in a recession, which had not really happened since the Vietnam War. And it continued in 2018, 2019. And so I started looking more into how do sovereign debt bubbles end? Like prior to that, I was like, well, eventually they print it or something, right? But it's like, okay, actually mechanically, what does this look like, and what time frame, and what are the factors, and what to look for? So I started to do a multi-year deep dive, and that's actually what kind of led me to transition away from mostly focusing on equity investing to more focusing on macro, money, energy, that kind of stuff, because I realized that we're entering a unusual macro environment that it's like the type of decade that kind of changes a lot of things. The bigger than normal things happen that history books kind of focus on more than other decades. And so in other words, I was like, this is gonna be a more macro decade than the 90s were, for example. And So that was kind of like the initial starting points. Um, and then of course, kind of like studying Bitcoin over time, seeing how that works. I originally I always found it neat, but I was like, I mean, the chance that any sort of like new techno money is going to work is obviously very low. So the first time you see it, you're like, that's neat, but I mean, come on. And then it's like when it comes back a second time, you're like, wow, that thing's still here. And then you're like, how does this thing work? And then you kind of like over time, you just kind of run into it more and more time. And so you actually think, okay, this is actually pretty interesting. It's the only asset that ever survived more like three 75% plus drawdowns and then went back to new all-time highs. I'm not aware of any other asset that has done that.
Dollar is really in jeopardy. The country, the United States, is printing money just to pay the interest on the debt, just the interest, right? So that's debt monetization and a debt spiral. And the GDP is not going to suddenly go up 50x to create enough tax revenue to pay down that debt. That in fact the GDP is shrinking. The amount of the dynamics are horrible. For the fundamentals of the US dollar are terrible. And everyone who's got a portfolio, and there's about $100 trillion under management by portfolio managers around the world, and that game is basically asset allocation. You're allocating your portfolio to avoid risk and get the biggest return you can. And the dollar is being downsized. People are moving out of the dollar. They're moving into Bitcoin. Bitcoin is now considered to be a safe haven. It's considered to be a risk-off investment, which is incredible because when we started back in 2011, when it was $1, it was considered to be the most speculative play in history, right? And now it's considered to be the safest asset in the world, safer than bonds. It's less volatile than bonds in 2023, safer than the property market. Property market's collapsing. Look at all these commercial real estate deals every day. Washington, D.C., all these, New York City, these huge office buildings that were bought for $300 million are going on sale for $30 million. It's like the biggest markdown in commercial real estate. It's unbelievable. And of course, that commercial real estate is the collateral that holds together all the banks that make all those loans. That's their primary business, is making real estate loans. So that means the balance sheet of all the major banks are severely impaired, which means they're going to have to get a massive bailout, which means going further into debt, which means interest rates are going to go even higher, which means the dollar is going to be continuously under attack. And nobody wants the dollar. Nobody wants the U.S. Treasury bonds. And into this mix is Bitcoin as a safe haven play. It separates money from state. It's unconfiscatable. It's cheap relative to gold, way cheap relative to gold, and it's cheap relative to the bond market. The global bond market it's still incredibly cheap relative to what you could call the total addressable market, or TAM. Total addressable market for Bitcoin is 400 trillion, because that's the total size of the pot of financialized assets on planet Earth. And it's everything on planet Earth that's traded is heading towards zero against Bitcoin, because Bitcoin becomes the global reserve standard. So these are all changes that are happening, and this is what the institutional money is realizing, the BlackRocks and these other folks, about Bitcoin. And so you're going to see a rotation out of these other assets like stocks and bonds and property and gold. They all get demonetized. All that flows into Bitcoin. And the Bitcoin price continues to head toward 1 million, 2 million, 5 million. And all these other things just continue to be demonetized and end up like the Venezuelan bolivar, just litter, garbage in the street that people just, use it to line their cat boxes. It's cat litter, essentially. You're wrapping fish in this stuff. It's worthless stuff. It's ridiculous. I would tear some up right now, but I don't have any handy. But usually at this point, I start tearing up paper money, and I'm like, hey, it's worthless. But, it is. There's nothing to it.